So what if the next great American economic boom is just around the corner? That's the bold prediction from historian Victor Davis Hanson. He believes 2026 is shaping up to be a year of massive prosperity, and today we're going to break down his case.
Hanson kicks things off with a really interesting observation about language, of all things. He's noticed this one word, unexpectedly, popping up all over the financial news when they're talking about positive economic data. He suggests this phrasing creates a kind of narrative of surprise around any good news.
Okay, so how does one little adverb possibly predict the future of the economy? Let's dive in and unpack Hanson's argument, starting with the recent data he uses as his foundation.
He first directs our attention to a few key economic stats from the third quarter. He argues these numbers were framed as unexpectedly strong, sort of flying in the face of what he says were more pessimistic predictions.
Okay, first up, let's talk GDP. Hanson highlights that third-quarter growth clocked in somewhere between 4.2 and 4.3%. Now, just to give you some context, a healthy growth rate is typically around 2 to 3%. So in his words, that's not just growth, that's a booming economy.
Next, there's inflation. He says that while all these predictions of hyperinflation were flying around, the actual rate for the third quarter was about 2.7%. In his book, that's a very positive sign.
And the last piece of this third quarter puzzle is unemployment. The rate was about 3.4%. Hanson is quick to point out that, historically, anything below 5% was considered a sign of a super strong job market.
So, you might be thinking, 2.7% inflation, what's the big deal? Well, for Hanson, it is all about perspective. He puts that number side by side with what he calculates as the four-year average under the Biden administration, 5.2%, to really drive home just how significant he thinks that recent drop is.
So, the recent numbers look surprisingly good, at least through Hanson's lens. But what does it actually take to create a sustained economic boom? Well, he has a theory, and it's kind of like a recipe.
He breaks it down into 6 key ingredients. According to his analysis, for a real boom, you've got to have more productivity, a ton of foreign investment, reasonable interest rates, a whole lot of deregulation, tax cuts, and of course, robust energy production.
Okay, so that's the recipe. Now let's see how Hanson uses it to cook up his very specific and very optimistic forecast for 2026.
The core of his argument is this. It's not just one of these things happening, but all 6 of them that are about to get a major positive push. He sees them all coming together to create, a perfect storm for economic growth.
All right, let's get into the specifics. What's the actual evidence he's pointing to for each of these ingredients? This is where we move from the general theory to his concrete predictions.
First up, foreign investment. And he's not just talking about a small increase here. He puts a massive number on it, $10 trillion. He expects that much money to come flowing into the U.S. economy in 2026.
Next, let's talk energy. He's forecasting a big surge here. He points out the production is already close to 14 million barrels a day, and he predicts it's going to climb even higher, somewhere between 15 and 16 million. More supply, he argues, could lead to cheaper prices.
Then you've got deregulation and tax cuts. Hanson says he sees a big wave of both on the horizon, what he calls more deregulation than we've ever seen. And the thinking here is pretty straightforward. Lower taxes mean more money for businesses and people to spend, and less red tape makes it cheaper to do business. He sees both as pouring fuel on the economic fire.
Okay, what about productivity? This is where technology comes in. Hanson believes we're on the verge of new tech really kicking in a big way. He specifically points to things like nuclear fusion, which he says is moving from just the theory to a real agenda item, and the development of these huge AI plants.
And the last ingredient in this recipe? Interest rates. Hanson is pretty firm on this one. He believes the days of rate hikes are basically over. He argues that once Fed Chair Jerome Powell's tenure ends, the only way for interest rates to go is down, not up. Now that's a big prediction, and not everyone agrees, but it's absolutely key to his whole optimistic outlook. So you've got this surge in investment, a boom in energy and tech, plus deregulation, tax cuts, and lower interest rates. The big question is, what happens when you mix all of that together?
Well, Hanson's conclusion is crystal clear. When he adds it all up, he doesn't just see growth. He sees what he calls an economic bonanza.
And that brings us right back to where we started with that one single word. After laying out this incredibly optimistic vision, his final piece of advice is to be prepared for unexpectedly. It's a fascinating way to end, isn't it? It leaves you wondering, is the biggest surprise of all yet to come? And if Hanson is right, What would an economic bonanza of this scale truly mean for you?